It is Thursday, March the 13th.
We're marching through March, halfway through.
Play on the words there, huh?
Nice sunny days these last couple of days with flowers coming out on trees and pollen coming for you.
For me, yes. I get to wake up every morning like I've been in a boxing ring.
This has been another interesting week of all kinds of discussions, all kinds of words being used, all circled around tariffs, detox, no pain, no gains, like old football coach. You got to have pain to have the gain.
Yeah,
So,
yes, or what your dad used to say to you, this is going to hurt me a lot more than it's going to hurt you.
It's become clear that this week, now whether it stays the course is the unknown, but this week it became clear that tariffs from the president's standpoint, not only from a negotiation standpoint, but it is a way to generate revenue. That's one of the things that he wants to do, and he wants companies to come back to the United States and bring jobs and factories back to the United States. And as you pointed out, if a country charges X plus in a tariff to buy this, well, we're going to do X plus to balance it out.
It just makes sense. I mean, Canada being the one that's under the microscope, but if they're charging us or charging our farmers 25% for or 250% tariffs for butter, then we're going to charge 250% on maple syrup. So I mean, you can't expect to have it so one way for so long, and I think that's where these tariffs are going to settle.
So we have that going on. That's creating anxiety into the business market, specifically because they don't know how to price it going forward. They don't know the cost of things that it's going to go forward. Will consumers slow down? It has all kinds of effects, so it creates volatility. But from other economic data this week, specifically inflation numbers, the inflation numbers came in what would be considered good for the purpose of the Fed.
And moving in the right direction. 2.9% was expected increase on PPI. It came in 0.3 less than that at 2.6. And then PPI numbers this morning, which are the wholesale numbers, the producer price index, came in flat, which was better than anticipated also because it was supposed to be 3%. So those are all good numbers and good for the Trump administration if they continue down that road.
In the second quarter of this year, the Trump administration is talking about trying to get into and through Congress the tax bill that they want to make permanent. Now, that in itself could be a win for the economy and could help potentially drive the market up. If inflation continues to come down and you see a slowing in the economy, you very well might see the Feds move interest rates down earlier than it was expected, maybe mid-half of the year or later.
This is the best scenario for the Fed because they're not having to do anything with rates and they're coming down on their own. So this is a great scenario for them. And as you say, they may find their way to go ahead and start some of these cuts, probably not till after the summer, but it does pave the way.
So if at this point in time we were to take our clients out of the market and go defensive because of all this volatility, and then in the second quarter you saw inflation you saw interest rates come down because of the Fed, and a tax bill got passed, it would be the very wrong thing and the time to do it because in all likelihood you'd see a jump in the marketplace.
And we've been saying we're very optimistic about the second half of this year.
Right.
And that remains. And then a lot of the data that's starting to come in is reinforcing the optimism.
So we're finishing out the first quarter as we said we would, looking at seeing what the administration was going to do. We're going to look at the second quarter now and see what sticks, what doesn't stick, where the direction of it is, what the Fed is going to do. The Fed will meet next week. So it's steady as it goes, but seatbelt signs are still on. We look at portfolios and holdings on a daily basis, and I can tell you we're having conversations on a daily basis. Hang in there with us. We're hanging in there with you. We're going to get through this, and we believe by the end of the year, as we said at the first of this year, the markets are going to be up and have the opportunity to be up, and that's where we're going to be focused on. If you have any questions, please give us a call. We'll have conversation. We'll sit down. We'll Zoom. We'll do whatever it takes to help you work through this.
Because always remember, it is your money.
And your money matters.
Thank you. We'll talk to you next week.